Stocks having their best first quarter since 1998. That much we know. The question, of course, is where do we go from here? To help me answer, Charles Nenner. He's the founder of Charles Nenner Research. Charles, big quarter. Welcome. Where do we go from here? Is it too late to buy this thing?
It's a bit late to buy this thing. We started buying at 1080 on the S&P in October. Became very bullish in December because we had a price target on the S&P of 1449.
Which is 2.5% away from where we are right now, give or take, on the S&P.
That's a fast calculation.
Yeah.
And I think it is 13,400 and something on the Dow Jones. As you know, maybe you don't know, my system says nothing moves at random, so we come up with the exact numbers of levels and the exact days that things happen. So you should see the Dow Jones as in our system as a subway that has certain stops. So the big stop is 1449. If it would go through after correction, then it goes to the next stop. It doesn't stop in the middle, so you can calculate it. But the first stop is 1449. It could be a very important high. So if you look at that, this is not the moment to get in.
1375 was an important high, and a lot of people trimmed there. We rocketed up. It was almost impossible to get long after that. Should we sell at 1449? Do we pause and refresh? Do we reiterate a stop someone higher? I mean, what's our strategy if and when we get there?
Well, investors should understand how to manage risk. And especially individual investors, they're more upset if they miss another 3% on the upside than 10%, 15% on the downside. Our system works like this. We get a buy signal, we get a price target, 40, 49, we're out. We're not going short. We don't have indicators for that. We're standing aside. There's nothing wrong with cash. You don't have to be always in the market. If you don't know what you're doing, stay out of the market. So after 1449, we're in cash, and we'll see what happens over there.
But people in cash are they're dying right now. They're angry at the market. It's doing things it shouldn't do. They're sitting in cash, and they've given up really the best first quarters, we said, since 1998. How do they keep them so? How do you instill that discipline in there to keep them from getting long at this point?
Well, it's always the same problem that the knowledgeable people can buy it at the high, at the low. And of course, they have to have a market to sell to. So the investor who got it 1080 in has to sell it to somebody, which starts slowly to be the small investor because he is looking at the trend and he's afraid to buy at the low. So now he's been drawn in. One of the reasons is he doesn't get any interest on it, so how's he going to make money?
Right.
It's one of the reasons why the market goes up, because there's no alternative.
And this year's been defined by an inability to get long. So many people have been waiting for a dip. As a result, not coincidentally, we haven't had a dip. There's been nothing. It's what kind of signal you're looking for. 1374 is your stop. Yeah. Are you kind of drifting into stocks at that point? Because now we're kind of giving them cash.
The stop is like this. Go out at 40.49. You always have people who say, could it go a bit higher? I don't think so, but let's say so they want to stay in. So just in case it goes down, where's my stop? So it says if you don't want to go out at 40.49, at least get out when it breaks the 13.75.
Okay. And 14.49, that's your level. It shouldn't go higher, but you mentioned if it closes substantially above that, that's another problem.
Yeah, but usually, let's say 95%, those targets work perfectly, so I don't expect it to go much above that. Also, we're close to a cycle top in the third week of April, and it all comes together.
Okay.
Now, why people miss the rally? The major reason is the misinterpretation of the media. And the media also have to get the economic studies organized, because it seems they didn't understand that if the whole world is easing, quantitative easing, started with the US, then actually Europe did the same thing in a different way. China was easing. So you cannot fight the Fed, but you cannot fight all the central banks in the world.
Globalized super Fed thing.
So the throwing in money, and always the stock market goes up then. So there were reasons to be bullish on the market.
And that becomes something that people echo over and over again, that this thing ends in tears, that we've printed so much money that it collapses. Are you expecting or anticipating a major correction, something subtle? Are there warning signs going on here, or just a pause that refreshes?
For me, there are always warning signs going on. But
constantly. But that's
no. But it's not going to end well. But you have to time it. So for the moment, we're still okay. By the way, I did some work. I see the GDP could even hit 4% in one of the quarters of this year. So everybody's going to be surprised again. But that should be close to the end. And then the business cycle rolls over. And then we have weaker growth.
So we're actually in the bullish part of a business cycle.
Yeah, but stocks do very well. They're very happy if you have 1.5% growth with low interest rates.
Right.
They don't need 4%.
All right. Well, 1449, the risk reward not so great here, but unless we break 1374, well, things aren't that bad, and this is the bullish part of the business cycle, so stop whining and accept it for what it is. He's Charles Nenner. We want to know what you think. Why don't you comment down below or tweet me at Jeff Mackey.